The European Central Bank's actions in the past month have had an impact on inflation and loan demand across the Eurozone. And as the ECB's inflation control measures take effect, the financial sector shows varied recovery trends, offering both challenges and opportunities for the months ahead. Lara Kılıçarslan reports.
For the first time since 2022, the European Central Bank is reporting a rise in demand for consumer credit and housing loans in Germany and Spain. And while the demand continues to fall in France and Italy, the ECB says this mixed trend highlights a gradual economic recovery.
So in the coming months, we will receive more data, which will help us assess whether we are sufficiently confident in the path ahead to move to the next phase of our policy cycle.
The European Central Bank began its most aggressive tightening cycle in 2022. Pandemic-era measures had pushed inflation in the bloc to record highs. The bank then raised interest rates for 10 consecutive months, which brought its key deposit rate to a record 4% and managed to tame inflation.
Higher interest rates and lower fixed investment continue to exert dampening pressure on loan demand from firms. At the same time, improving housing market prospects, consumer confidence and spending on durables positively supported demand from households.
Inflation in the 20-nation bloc is expected to slowly ease in the coming months, with the ECB seeing some positive movement ahead. Banks also expect demand for loans to increase across all categories in the third quarter. And analysts say this shows a hopeful outlook for the region's financial stability.
Banks' risk tolerance was the main driver behind the net tightening for loans to firms. Competition also contributed to an easing of credit standards for housing loans.
Economists forecast that inflation will ease. The economic rebound, though slow, offers hope for financial stability. But it remains to be seen if these short-term signs will lead to lasting growth. Lara Kılıçarslan, TRT World.
For more on this now, let's bring in Terence Hove, Senior Financial Market Strategist at Exnes. He joins us now from Johannesburg, South Africa. Great to have you with us, Terence. Now, how does the recent rise in consumer credit and housing loan demand in Germany and Spain reflect on the overall economic recovery in the bloc?
Well, thank you for having me on the show. I think what we've seen with regards to the housing prices growth, we see that they're likely to become more homogeneous across Europe. And following that stark divergence since the start of, as we just heard, the ECB's hiking cycle in 2022. But this process will be gradual, for example, for Germany, as house prices remain under pressure in the near term. But growth remains hot in some of the southern European countries, such as Ireland and Netherlands, and certainly with lower rates coming in this year, that loan demand is going to pick up as well.
Right, now the ECB has been the first major central bank to cut rates. What does this tell us about the resilience of the economy of the Eurozone?
Yeah, I think, it speaks to, that gradual process that I've mentioned, that homogeneous, effects across the Eurozone. And it speaks to what the ECB sees as the long-term health of the European Union as a whole. And generally how, as you've mentioned, they are ahead of the curve with regards to stimulating that growth coming from 2022, that aggressive hiking cycle. And prior to that, because of the COVID-19 pandemic, the rates were in negative territory. So this is a very good time for them to start stirring up that demand as well, to strengthen and make the economies a lot healthier.
Right, now considering the mixed loan demand trends across different European countries, what are the key indicators that the ECB will focus on to assess future policy directions?
Yeah, I think the key matrix that they've been watching is of course that inflation figure. It's very paramount as they've consistently signaled that it needs to get to that 2% target. It's very specific. So I think that'll be the key matrix that they'll be looking at, because they're also careful not to break the economies as well. They don't want it to overheat, and they don't want it to cool down too much at the same time. So it's striking that balance, hence that becomes a very key matrix for them.
All right, Terence Hove, Senior Financial Market Strategist at XNES. Thank you very much for joining us.